Welcome to Listen to the Market for March 12. Even a two-way boulevard sometimes meets an obstacle or a roadblock or even a detour. So too from my side with doing these videos on a daily basis and even on the weekend. So back at it, the report for Monday. Rather than spending time looking at Monday's price action, what I want to do today in this report, in this video, is spend a little time looking at the actual language of the market. When you're learning to listen to the market, the first thing to do, obviously, is to learn the individual letters that make up the words, then the words become a sentence. In the second half, or the second part of the video, I'll give you an update on the real money, real-time performance, applying a subset of the L.I.V.E setups to show you what can be and what is being achieved right now. Okay, the language of the market. On the screen we have three charts, monthly, weekly and daily. Up until now I've been focusing on intraday movements. Doesn't matter whether we're looking at whatever time frame, the monthly or the weekly, the daily, the 15-minute, the same concepts apply. Each bar has a message for the next bar. Then the next bar has a message for the following bar. So let's start looking at individual bars. Pick any one. Let's go to an obvious one that's marked a low point. This one here. So what can we see here? We can see that we have a lower low and a lower high. Range seems to have expanded. However, the open and the close are mid-range. So clearly, the buyers push the prices up, the sellers push the prices down. The sellers push the prices down, the buyers push the prices up. Net progress is zero. It's almost as if the market's been spinning its wheels, going nowhere in a hurry. In terms of a formal L.I.V.E setup, there was a little gore buy, indicating that, okay, the long side of the market is the one to be on. Let's see if we can find another pattern like that. Well, over here we have a similar scenario, where we have a lower high and a lower low, albeit with a smaller range, and again, the difference between the open and the close is rather small, and it's in the middle of the bar. So again, spinning its wheels, going nowhere fast. In terms of a L.I.V.E setup, yes, there was one. It was a C3D compared to another market. Another example, where can we find another example like that? Over here on the daily chart. Same concept, lower high, lower low, difference between the open and the close being small, and it being more or less in the middle of the bar, again spinning its wheels, and again this time round it was an RTV buy, looking for a rally that caught that movement up through there. So that's just one alphabet, one letter of the alphabet. There aren't too many there to learn, far less than the English alphabet. Another one over here is when the market goes higher than the previous bar and lower than the previous bar. Clearly anyone who was buying up through there, well, been stopped out. So it's been a one bar reversal that can and does indicate a change of control in the market. Over here on the daily chart, you can see the same scenario. Trading higher than the previous day, trading lower. Okay, the buyers up there, swing traders got caught, and they're out. So the buyers are in control up until the point where the sellers come back into control. So it's another alphabet, another letter of the alphabet. Over here on the daily chart, the monthly chart, same scenario. It goes higher than the previous bar, lower than the previous, change of control. The difference between this example and that one, really in my eyes, is nominal. They both led to a movement down. In this case, the movement down was small. In this case, the movement down was sustained. There was a sell setup in line with that one, which is what caused perhaps, or coincided with, certainly heralded a short position to be taken for that fall down through there. Another example of the outside bar down close is this one up here. Trading higher and trading lower and closing below the previous close, and that preceded yet another multi-month fall down through there. So slowly, as you build up your skills in terms of reading the market, listening to the market, build up your repertoire in terms of the alphabet, the letters themselves. Individual bars then become setups. Setups then become campaigns. Campaigns then become trading. And that's where the fun begins. So speaking of trading, let's take a quick pause and I'll come back and go through the results from last week with the real money, real-time trading using some of the L.I.V.E setups and the concepts. Welcome back, and let's have a look at the actual real money, real-time results applying the L.I.V.E setups and the campaign management and money management routines. Real time, real money, real performance. Well, last week's results were nothing to write home about. A loss of 1.14R. Well, a loss of 1% on the account. A loss of 2% if R is 2%, so no big deal at all. What makes the difference between the actual results and the baseline of the yardstick results is just one campaign that the operator, the trader, missed. The baseline ended up pretty much level for the week, whereas the operator was down just on 1R. No big deal. Let's put this into context of the bigger picture. Since the beginning on February the 20th to now, March 9, Friday, the account's up 6.12R. There were 52 campaigns taken versus 59 that should have been or could have been taken. And there's just over a 1.5R difference between the actual and the baseline, the yardstick. In terms of internal stats, strike rate of 48%, yeah, that's okay. Wins in a row, 6. Losses in a row, 4. Average wins, average loss, 1.19. That's okay. Maximum campaigns until a new equity high. Well, clearly, from that equity peak there until now, 15 campaigns, still in a drawdown. Now, this is the testing time in terms of stickability. Knowing that a drawdown is natural, knowing that a drawdown is normal, knowing that a drawdown is expected, not looking to jump ship and trade a different market or a different rule set, but sticking with it. And that quite often is the difference between a winning trader and one who's not winning. Knowing the background, knowing the internal stats, knowing that drawdowns are to be expected, knowing the depth of the drawdown in terms of time, campaigns, and also price. So stay tuned for next week's report of the real money, real-time application of the L.I.V.E setups. That's it for me for now. Catch you tomorrow. Bye for now.